Okay, I think we should be good. Let me double check my sound real quick and then we'll get on to it. One sec here. Okay. Okay, I think. All right, we're good. Cool, cool, cool. What's up, people? What's up, people? Good morning. We, of course, have CPI inflation data coming out in 15 minutes or so. And, things aren't necessarily looking the best. So, just kind of wanted to jump on, do a quick little live stream, and just talk about exactly what I'm seeing and, what we can expect today. I think things definitely aren't looking the best. I'm not going to lie. You related to Justice Hill, the NFL player? No, I don't think so. I mean, we're both Hills, so you never know. But, no, I don't think so. Um, but yeah, so things aren't necessarily looking the best in the market right now, and so I kind of wanted to just jump on stream today, talk about what we're seeing, give you guys a little bit of an update, talk about what started this last night, and then of course we'll cover CPI data when it comes out in about 15 minutes or so. Now, of course, we have been seeing a little bit of pain in the market. Bitcoin's not really reflecting that, but if you look at just about anything else, like Solana, for example, I mean, this thing has been on a freaking smashing trend here. It lost every major level of support for the most part. I told you guys if we lose 30, going short isn't a terrible idea, and obviously we did lose 30 here, and since then we're down about 4 or 5%. So I'm sure some of you got in on that. So I mean, of course, congrats to that. But yeah, this market's definitely not looking the best. And now I think that this was kind of sparked off by what we got last night. We saw someone bar from the Fed, and basically what he was saying is that crypto is risky. I mean, we've heard it a million times. But of course, whenever we're waiting, we're kind of relying on the Fed to pivot in order to get out of this situation. Whenever they say something that is somewhat, what's the, I want to say detrimental, but I suppose the word could be detrimental towards crypto, then obviously no one really likes that. So I'm going to cover this really quickly. Then we're going to go over into then we're going to go into some technical analysis just prior to this launch, and then we're going to look at the CPI data when it comes out. So what we got last night was that Barr said the Fed is working with the Office of Comptroller of the Currency and the Federal Deposit Insurance Corp to highlight the risks to banks of concentrating their deposits in the crypto industry, warning that banks could experience deposit fluctuations linked to price swings in the broader crypto market. I think that's a bit obvious to everyone. I don't know who doesn't know that, but of course, I suppose. The recent volatility in crypto markets has demonstrated the extent of centralization and interconnectedness among crypto asset companies, which contributes to amplified stress. Now, personally, look, I'm not going to sit here and pretend like I know more than this guy, but I feel like this is just obvious. Okay, obviously there's an interconnectedness amongst crypto companies because many crypto investors are crypto investors of many companies. I feel like it's almost as if he's saying that these companies are working together to make these things happen, and it's just not the case. I don't think that's a case of centralization. I think he's misusing the word centralization. I feel like there is a lot of decentralization and centralization in crypto, but the fact that when ETH falls, Solana falls, or when Solana falls, ADA falls, doesn't mean that it's centralization. I believe it's more of just an impact of multiple investors or general crypto sentiment, right? Maybe people are putting the whole of the crypto market in one Easter egg basket. That could be the case, but trying to use that as a kind of a diss towards crypto as a whole is weird to me. I don't know. So it says, while banks were not directly exposed to losses from these events, these episodes have highlighted potential risks for banking organizations. Speaking at DC FinTech Week, Barr said the banking regulators' engagement with financial institutions on the risk of accepting deposits from crypto firms is not intended to discourage banks from providing access, which is great. And I think many people misunderstood this, okay, to banking services for crypto companies, but instead of making sure that any risks are appropriately mitigated. So what they're saying is that if they're going to be working with a financial institution, they need to understand that taking on the risk of receiving crypto as some type of deposit is risky because, of course, given the volatility, they may end up losing a lot of money in the short term, obviously, if they sell it or whatever, I suppose. And so because of that, they're just saying that they're highlighting on making sure that they're capable of understanding that that is a risk. I don't know who would work at a bank that doesn't understand this unless they're like 95 years old. So I don't really see the big deal here. And this is also saying that the Fed isn't saying that they're trying to destroy crypto necessarily, even though I do believe they're the ones that kind of caused this morning. They're not necessarily trying to destroy crypto, but I do believe we're in a situation in which they're also not trying to stop financial institutions or banks from providing access to crypto, but more highlighting the risks of that, that crypto that can be involved with crypto. But I don't know who would have seen crypto this whole year and not already know these risks. So when things like this come out, I don't necessarily understand the logic behind it or why it was, worded a certain way in order to, cause some type of detriment to the market, because it's almost like we know this already. This is obvious. And, so it wasn't really anything new. Barr's comments mark his full first remarks on cryptocurrency and fintech since taking the top regulatory post at the Fed in July. In his speech, Barr said regulators need to balance supporting innovation while providing guardrails that protect consumers and guard against systemic risks. Barr also warned that crypto companies making misrepresentations about deposit insurance can confuse customers and may lead to increased withdrawals at crypto-aligned banks that provide such services during periods of heightened stress. And what he's saying is whenever companies lie and say they're FDIC insured and they're not, then that puts them in a situation which it's not yet. It's coming out in 12 minutes. But what they're saying again is that whenever banks or crypto financial institutions such as Celsius state that, their deposits are FDIC insured and they're not, and then we see some type of bank run on the crypto company, then that does put the bank that is tied to that crypto company or financial institution at risk, obviously, in heightened stress situations such as like the lunar crash or just things of that nature. So, I mean, there is value in that. I do agree with that. Those comments follow action the FDIC took in August, which it ordered crypto exchange FTX, along with several other crypto firms, to halt what it called false and misleading claims. An FTX official had made about whether funds at the company are insured by the government, because of course they're not. That's not how that works. You're not a bank, right? So for that reason, of course, what we got last night crashed, a lot of things. Of course, we saw from that was pretty much what led to this big fall where Solana, for example, lost about 7 to 8%. We could see something like ADA, absolutely getting battered. Ethereum also at one point was down like 10%, or about 5%, roughly 10% from the peak up here. So overall, that's what kind of caused the general crash that we did see. Again, I don't really think that's anything new. He's just saying crypto is risky, but I feel like whenever we're in bear markets, people say much worse than that. This was more just, a warning to banks for valid reasons. Do I think it was necessary? No. But what can you do, right? We're in a bear market, okay? And he might have just been asked a question, so, what can you do? Anyway, we have 73 people in here, and we have 15 likes. Let's try to get that like counter up to like 30, 40. Let's start getting the name out there a little bit more, get this live stream going here, okay? But yeah, so let's kind of talk about what we're seeing in terms of the charts. Let's start looking at what all is going on and what I'm interested about. I'll tell you guys exactly what I'm interested about, what's going on right now, and how this news may affect things in 10 minutes. I will make a pre-warning. I'm not doing any trading today. I don't think that is a good idea. If you make any trades today, long or short, you're literally just flipping a coin. It feels like we're more likely to capitulate. It feels like we're more likely to maybe start to dwindle under these prices. But because it feels like that, sometimes that's whenever we bounce. So I'm not playing this game here. You guys can play it, but I'm good on that. But let me show you guys what's going on. So at this point, I know things do feel pretty bad, but if we're being honest, we're still in a pretty decent position here. From a general sense, we are retracing off of this little wedge that we had been putting in over the last couple weeks here, in which we're putting in the higher highs and the higher lows. Now, obviously, whenever we break out of these, we will usually come back down and retest these points of support. And so right now, all we're doing is we're just kind of back testing these two key levels of support around 18.1, and we're retesting 18.5. These are our two key levels, and we're holding both of them quite well. So I know it feels bad right now, but I do believe we're in a position where we still have a lot of support under us. We have obviously 17.6 wick support here. We have bottom support here off of this wedge, as well as touch support and established support on the wedge there. And I think, these three little levels of support are holding up quite well. And so it will be interesting to see if we capitulate below them with this news today. But I'm still not expecting any true pain while we're above 17.6. Yeah, we might capitulate again, but we very well could go sideways even further from there. Okay, so really, I know a lot of people are wondering, like, should I be worried? Should I be cashing out? Should I be selling? Personally, I'm not all that concerned until we lose 17.6. We come back down below this, then I'm like, okay, yeah, we're probably fucked if we're being honest here. But at this point, I'm not all too concerned, to be very honest. Now, Ethereum is in a very similar position, but a little bit different. Looking at ETH, I believe ETH is in a very, very, very weird situation here. Okay, I believe that, this 1,240-ish level is extremely important. Obviously, this is where we ran into resistance. We got closing resistance here, closing resistance here, closing resistance here, and closing resistance here before we broke through. So we had 4 points of closing resistance on 1240. We got closing support here on 1240, and now we're at 1240 right now. Guys, this is a very, 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 very crucial moment for Ethereum. I believe that if we do lose 1240, the likelihood of us capitulating and starting to even possibly retest back down towards 1040 becomes extremely likely. I mean, look at these moves. Straight down, straight up, straight down, straight up, straight down, straight up. Right? Typically, when you're making moves of this nature, whenever there's a very strong lacking of liquidity in this level, in which we will usually just capitulate down and bounce back up, I believe that, we very well could be in a position in which this 1240 level gets lost on the daily close. I mean, we very well may need to start expecting, some further continuation. And that does kind of seem likely from what we have right now, honestly. Of course, we have the downtrend, we have the sideways movement or the upward movement, one of the two, and typically that does lead to the continuation of the downtrend. Not to say that we're going to necessarily have to come back down here, but if we lose 1240, it seems very likely. It just seems much more likely, and that's where we're at right now. Right now, the good thing is if we look at the hourly charts, we are holding it well. We've kind of run right into it. We recovered, we retraced a little bit. We got a strong wick as well as the our RSI coming way down deep into this, sub 20 level. We've not been here in a while. The last time we were here, we got a strong bounce. Let me get this pulled up. We were here, there, and we were here, there. And what we can see is that both times that we did this, we at least got a micro bounce, right? So we got this and we got a micro bounce off there. And then back here, we got a mini bounce before capitulation. And then we started to reverse, especially once you could see this bullish divergence playing out, in which we had this low, the higher low, this low, the lower low. Based off of those two moves, boom, of course, we did get a little swing here. So it wouldn't surprise me if we get a swing off of this level at some given point, honestly. But I think we need to just be very careful because getting daily closes below this level, especially if we backtest it and start failing it like that, I do believe we will capitulate. I think that is exactly what would happen, and it just seems very likely. Now, we can also look at the Fibonacci's to confirm that. We can go swing low to swing high, and look what happens, right? If we lose this level, we enter into our 618 to 786 box. Look where I drew this line. Look where this support is. Right on our 786 level. So it's in my belief that, if we do start to lose this level, likelihood is we come back down to 786 lows. And, hopefully bounce off that level. Of course, we could maybe do something very similar to Bitcoin, of course, and put in something of this macro double bottom for the time being. It's not out of the question to see that happen. It looks something more like that. It's not impossible. But of course, we just need to be very careful because I believe the loss of 1240 could be quite detrimental. In terms of a short trade, here, of course, I'm kind of going a little bit quicker because the CPI data comes out in 5 minutes, but in terms of a short trade here, if we get a daily close below 1240, I am still expecting a possible bounce here, again, because we have dove so deep. The bad thing is, though, that our daily RSI is not even, we're not even to 30 yet, and so there is a lot of room to the downside here. So I do believe capitulation will continue, but I think it would happen after some type of bounce here, okay? And so what I would be looking for is maybe not the first break of 1240. I think what would be the most likely to happen is that we get a break, maybe a little bounce, and we start putting in, or even just a continue down here, right? Maybe we go to like 1160 or something like that. We start to get bullish divergence forming on these hourlies, then we get a bounce, a retest, and then once we start to capitulate, I would be looking for the short trade on that after the retest. I wouldn't necessarily be trying to chase this and trying to open up a short trade off of this first breakdown because, again, we're already down 5-6%. I feel like the retest is very likely before a strong continuation down to these levels. And so for that reason, I wouldn't be opening it until we get the retest. Okay. And I definitely would be putting a stop loss around like 1280, somewhere up here. Okay. Just my opinion. 726, we can go over Solana really quickly. Again, CPI data. I do want to get this pulled up. One sec. This is my new account here. If y'all want to check this out. One sec. Just getting my Twitter pulled out. Bureau of Labor Statistics. Give me 1 second here. There we go. All right, so of course we are getting CPI data. So we've gone over Ethereum, we went over Bitcoin. Those are the two major ones that I'm looking for anyway. So I'm not all too worried about. We'll go back over Solana and all that in a little while. Again, I really want to be able to see what is all going on with CPI data, and I'll give you guys updates. Once this does play out, it should be interesting. It definitely should be interesting. Let's look at total market cap right now. This thing definitely looking a little bit bearish, honestly. We definitely got a confirmed, here we go, confirmed back test off of this. So this is what I was warning a lot of people about. I was like, double establishment of support, last year's July market. Of course, then we got this little cool down in May. We bounced off of that, and now we are continuing to the downside. It would, it would be in our best interest to prepare for something pretty ugly, and of course now we're all the way back down here. But again, we still have two strong levels of support below us. We're doing quite well, honestly, even on total market cap. We have this double bottom that we're looking to put in here. Not quite sure that's going to hold, but we did have this one down here, which held up quite well. We had a double bottom here. We back tested this MLR. We used that to reach this new high. So I think this level is very likely to, show us some support here. And so for that reason, we still have 824 billion as importance. We of course have our June lows as importance. I mean, there's still a substantial amount of information here. Okay, that says that we very well could still delay this thing a little bit. Okay, even if it capitulates back to these June lows and then we go sideways into the Fed meeting, you never know. Obviously, it wouldn't look like this, but who knows? It's all speculation though. So in terms of CPI data, we are expecting 8.1%. Anything above that, but 8.1 to 8.3, I think will kind of cause a fall in the market, but it shouldn't be terrible. I think anything over 8.3 is going to destroy the market, and then I believe anything sub 8.1 could be actually pretty good. So we'll see. Let's see what happens. Also sitting right around 100 concurrent viewers with 34 likes. Let's get that up, guys. Let's get up to 50, 60 likes. I know we can do it. I know you're paying attention. Don't make me start doing the little annoying microphone tap thing. Let's get those likes up to about 50. But yeah, so we should be getting information any second here about what all is going on. Let's see. Put y'all predictions down. Let's go. What do y'all think? I'm just going to go with 8.2. I would just assume we're probably going to miss expectations just because we always do. My guess is 8.2%, but of course we'll see. Let me know what y'all think in the chat. And we'll go into it too. Once they release the information, we'll kind of dive into it, see what all happens. And then I'll give you my opinion from there. 7:30 should be coming any second. We shouldn't have anything. I'll get this pulled up as well. $8.1. Yeah, this is pretty much the general consensus for expectations. 8.1% on CPI and core CPI at 6.5%. But we'll see. Oh, here we go. Real average hourly earnings for all employees decreases 0.1%. Come on, BLS. You know what we're here for. We don't care about this. I'm positive it comes out at 7:30 my time. So it should be any second now. Again, we're just waiting. Like I said, should be coming any second. CPI for all items rises 6 point. Here we go. All right, let's see what we got here. This looks bad. Let's see. Okay, consumer price index summary. I don't know why it looks like this, but it's okay. Energy index rose. Here we go. Okay, let's see what we got. All items. So we came in at 8.2%. That's not terrible. Expecting 8.1. We got 8.2. Let's see how the market's reacting to this. Hard capitulation. My guess, I don't think this is horrible. I would expect this to recover a little. Just a little. If I had to get, I don't know. I may be wrong. I don't think this is terrible. We'll see. Wow, look at this. So mixed expectations. Did I say 8.2? I did say 8.2. Look at me, turn up. That was just a guess. Let me be honest. We always miss. I don't know if you guys notice that shit, but we always miss. Okay. 8.1. Bitcoin getting hard bounce off 8.1, looking to establish double bottom lows here. That's interesting. All right, let's go here. Let's see what else is going on. Here we go. All right, let's see what kind of made this up. So obviously food is extremely fucking high. About the same though. You know, in terms of this is not grown. What changed the most? Energy's down, for sure. Yeah, honestly, this isn't bad. I mean, it's definitely not the best, but I definitely think it shows signs of progress. The index for all items less than food and energy rose 0.6% in September, following an identical increase in August. The shelter index, so that's definitely not the best news. Honestly, it just shows that it's rising in the same amounts, and that just kind of shows that it's not we're not going down yet. And I think that's the biggest thing that people are the most frustrated about, is that we're not going down yet. And so I think the fact that we're not going higher is good, right? I think the fact that we're not doing, give me 1 second. I think the fact that, that's what I was expecting. So the fact that we're not doing this is good, right? I would say, personally, right? Maybe we're in a situation where, things are starting to become more linear before plateauing and eventually seeing a little bit of a rollover next year. I mean, that's definitely possibly the case. But what we got, it definitely isn't the best. Let's see if we're getting any news outlets. Let's get this pulled back up. So the index for all items, food, here we go. The owner's equivalent rent index also increased at 0.8%. Jesus Christ. Over the month, the largest monthly increase in that index since June 1990. The index for lodging away from home fell 1% over the month. So that's not terrible. But the rent index rising 0.8%, I mean, that's going to be a massive factor that we are going to have to address. But I think the current market, I think the housing market is going to have a general effect on that. I think we will see it come down eventually. I know there are some cities that are lowering rent already. Inflation came in at 8.2. Lowering, rents already. I've seen it a little bit around my area because people are struggling to find places because they're just not affordable. And so hopefully we do start to see that coming down. A few indexes declined over the month, including the index for used cars and trucks, which fell 1.1% in September after decreasing 0.1% in August. So that was actually a pretty strong fall. The apparel index fell 0.3% over the month, and the communication index decreased 0.1% in September. So there's definitely a little bit of good, good going on in here. The index for all items less food and energy, the core CPI, rose 6.6% over the last 12 months, the largest 12-month increase in that index since the 80s. The shelter index also rose 6.6%, that's a lot, 6.6% over the last year, accounting for over 40% of the total increase in all items less food and energy. Other indexes with notable increase over the last year include medical care at 6%, household furnishing and operations at 9%, new vehicles at 9%, and used cars and trucks at 7%. But do remember, this is going down a little bit. Man, that's pretty rough, honestly. Let's go back up here a little, and let's see. So increases in shelter. So let's talk a little bit about the full index now. So increases in the shelter, food, and medical care indexes were the largest of many contributors to the monthly seasonal adjusted all items increase. These increases were partially offset by a 4.9% decline in gasoline, which is great. We're still seeing gas go down. The food index continued to rise, which is a problem, increasing 0.8% over the month. As the food at home index rose 0.7%, the energy index fell 2% over the month as the gasoline index declined, but natural gas and electricity indexes increased. So I think we're starting to see the residual effects of, everything else, right? I think what we saw triggered by gasoline has now started to continuously affect the rest of the world, and it's just going to take a while for it to, even back out. And that's just the nature of what we're in right now. The index for all items less food and energy. So we saw that. Okay. So overall, not terrible. I don't think it's going to, I'm not quite sure that that's going to trigger enough to get us all the way down to, I don't know. I don't know if that's going to be enough to put us down past 17.6. I feel like there's going to be a lot of buying pressure. Of course, we are seeing the bulls step in a little bit here, just a tad. Maybe on the minutes, it's a little clearer. But this does look like continuation to me, personally. So generally what will happen is we'll have a downtrend, we'll enter into something of this nature, and then we'll pull back, retest the bottom, and then if we lose that, we capitulate hard. So right here on Bitcoin, I would be, monitoring very closely between 18.5 and 18.1. I think that if we break 18.5, we're probably in a better position and maybe can rally. I don't think we should rally. These were worse than expected, so I don't see a valid reason as to why it can rally, but maybe, I don't know what that narrative would look like. Maybe people were just expecting us to miss even worse, and we didn't. We were sub 8.3, which is great. We were expecting anywhere between 8.1 and 8.3. We got 8.2. So again, I don't believe this is terrible, which is why we're starting to see this get bought up a little bit. I'm still under the belief that's probably gonna, pull back a little, but overall, again, it wasn't as bad as it could have been, but it definitely wasn't the best. I think there's a lot of neutral ground there. And so for that reason, I'm not quite sure that that's going to be enough to really hard capitulate this market. Honestly, we look at something like the hourlies, which is already fully pulled back. We look at something like the 4 hourlies, which is already fully pulled back. We're also getting drives of bullish divergence already, in which if we look here, boom, we have this low up here. We have this low down here. But in comparison, of course, we do have a low, and we did come down to set the lower low. So micro, lower low, micro. Oh, we actually do. This is actually a higher low where we are right now. So, little drive of bullish divergence there. I feel as if we're in a position in which we very well could just continue here. It wouldn't honestly shock me whatsoever to see this thing sideways trade for, maybe even another couple weeks. When's the next Fed meeting again? Somebody put in the chat when the next Fed meeting is. I don't remember. But, overall, guys, I don't really believe that this is that bad. Yeah, I don't really believe this is that bad. Let's see what the news is saying. No, I forgot about that one with this one. Okay. Let's just go. Let's do it the easy way. Let's go here, and then let's go, there we go. Okay. See what the Wall Street Journal is saying. Nothing. Okay. So it rose 8.3% in August. So the good thing is that this is kind of what I'm paying attention to, right? And this is why I believe this isn't that bad. So obviously it would have been better if we were lower. But if we look back at June, we went up 9%. We look at July, it was up 8.5%. We look at August, it was up 8.3%. So what you're kind of seeing right now is a decelerating rocket, right? Which in June, if we're talking about, just overall growth, right? Incremental growth. June, if we were here, July, we were here, August, we were here. Oops, here we go. Okay. June, we were here. July, we were here. August, maybe we were here. And I feel like right now we're going up in the rate of increase. Now, we actually did go, you can see, right? We're starting to go. We're still going up. Don't get me wrong. It's an 8.8% increase is still fucking huge. But the rate of increase is decreasing, right? And so what that usually means is that this move that we're seeing is slowing. Even if it's not slowing as fast as we'd like it, it's still slowing, which is great, okay? What that says is that maybe the Fed recognizes that, okay, maybe we are in a position to see that we're finally starting to have an effect. Do they maybe need to keep going on 7.75 or ones? Yeah, probably. 75 BPS or 100 BPS raises? Yeah, probably so, until they finally start to see it doing this and would start, really going down. This rocket starts to go down. But the fact that we are starting to see these numbers declining, right? We're not still growing, it would be bad if in June we went up 9.1 and then July we went up 9.3 and then in August we went up 9.7 and then we're at 9.9 because then it's like, okay, this thing is it's going up and it's going up faster, right? But where we are now is we're going up, but the rate of increase is declining. And so I feel like that's a good sign. I feel like that's a good sign to say that, we're in a possible position in which we could start to see that going negative eventually, but we're not there yet. That's for sure. We're not there yet. Now let's go to Twitter. I kind of want to see what everyone's saying. Let's see. Hotter than expected. Core CPI surges to 8. Okay, we saw this already. And this is one of the bigger causes. So I'm kind of like drawing a torn right now because we can also see here, whenever we look from July to August, this went up 0.4%, where we went up this time around was 0.3%. So you can kind of see once this rate of increase starts to decline, it's usually a good sign. So look back here, right? 4.9 to 5.5 was a 0.6 increase. 5.5 to 6 was a 0.5 increase. 6 to 6.4 was a 0.4 increase. 6.4 to 6.5 was a 0.1 increase. Then we started to go negative for a little while, of course, before other macro environmental factors affected it. So what we can see is that it started to decline, right? This rate of increase was declining, and that's a great sign. From here, we went up 5.9 to 6.3. That was 0.4. Now we're from 6.3 to 6.6. That's 0.3. And so higher than expected, could have been better, but we're definitely still seeing a decreased rate of increase. And so for that reason, I mean, I still think there is some light in it. But the fact that we're higher on core CPI than we were in June, definitely, or back in March, definitely isn't the best sign, honestly. I do believe this is kind of, again, a residual effect of everything else that's going on. I feel like what we saw causing this stuff back here just really went into effect now, right? Whenever we look at the housing market, whenever we look at all of these other institutions that are struggling as well, whenever we look at food sector is still struggling, all of that is still playing a factor, or a factor, right? Now, we did get some interesting information. When was this? Where was that at? 1 second. Inflation is 20%. Shit, it honestly might be. So what we can see here, I feel like this also could be a decent sign for the Fed. So what it said is number of unemployed people per job opening from August to August. What we can see is that we did get a nice little wick up here, this little push up. The Fed, I do believe, is trying to raise unemployment. I think that they're trying to really affect the market. They're trying to lower demand. How do you lower demand? Stop people from having money. How do you stop people from having money? Stop people from having jobs, obviously. So the fact that we are seeing unemployment going up a little bit, I think when you mix in the fact that unemployment did kind of surge up just a tad. Now, this is unemployed people per job opening, not the pure unemployment number, of course, but you get the point here. Like, whenever you mix in the fact that we are seeing the number of unemployed people per job opening increasing a little bit, I think that could be a decent sign that the economy is definitely slowing down. I feel like that could be a leading indicator that demand may also be slowing down eventually, maybe not now, but eventually. So considering that, and we're mixing that in with the declining rate of increase for inflation, not terrible, not good. You know, that's where we're still at. But I definitely feel like we're starting to verge much closer to a better time of things than a worse time. Now, looking at the markets, let's kind of see what's going on. Again, I told you guys this usually breaks down. That's just kind of what it does. What happens is we get this, and then once we break out of this, boom, we have the downtrend, boom, 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 then we start to break down. Now, what's going to happen is we're probably going to push back down here to like 8.25. We're going to look to retest it, maybe get a bounce, and then if we lose that, we'll come back down to 18.13. These two little levels are going to serve as super important. And if we lose these two, likelihood is off of 18.1, we do capitulate. I think that probably opens the door for us to come back to 17.6. And then we'll retest those bottoms. But again, I don't think... All right, we do have 17.9 in the way as well. You got to remember, all of these wicks are important because these are levels that bulls stepped in, right? So what you can see right now is that this is just a huge-ass zone of liquidity between all of these wicks. And it's the reason why when you look at something like this, where all these bulls stepped in back here, why we've been struggling so much to get down into it is because so many bulls are willing to step in this zone. And so that's why I'm still not all too convinced that we're in a position in which the market's going to capitulate under 17.6. I don't necessarily see that happening. It could happen. It could be a slow, steady trot there until the Fed meeting, but I don't necessarily think that has to happen. Now, let me look up again when the next Fed meeting is. Let's see. October, November 2nd, and 3rd. So it's not even in October, it's November 2nd and November 3rd. That is in exactly 3 weeks from now. So I don't think the next 3 weeks are just going to be death. Honestly, I don't think that's going to happen. I could be wrong. This isn't enough. This honestly isn't a move enough for me to want to start shorting this market. Again, you guys know where I'm at with shorting. I think that you probably can make some money from shorting right now. But the way I look at it is like whenever it comes to shorting this market, I feel like that's just as risky as going on some super long trades, maybe like back here, right? Or like here, or somewhere around there, right? Like, I feel like, yeah, you could go long right here and still make some money to the top side, but at what point are you taking the risk that you're going to run into this one? Like, how do you know that this wasn't this, right? And I feel like we could be in a similar situation right now. It's like, we may not be at the bottom yet, but I feel like we're pretty damn close. And shorting right now, it just feels risky. Like, we might not be at the bottom here, but we very well could be here. And then boom. And the next thing you know, the people who really started to short see some gains here, don't know when to close their positions, and then they end up closing it here. Like, what are you really gaining from taking on such a risk like that? The opportunity cost for a big short trade right now just isn't enough for me. I mean, it would have to be like a 50x, and you're just expecting like a 3% move down. But I believe shorting on high leverage right now is just super risky. So that's why I'm not all that interested in it. Personally, I'm just waiting, for these stronger confirmations. Now, that's not to say if we lose 17.6, likelihood is we capitulate to like 16, 15. I think it's pretty likely what would happen. If we lost 17.6, we do something like that, back test and maybe go sideways and then start to kind of pull off towards the downside. Then there could be a beautiful short trade to take on here. But trying to take it on right here whenever everything in the market's trying to force us below these June lows and we're just not going below them, I think that's risky. It just gives me a bad feeling. Okay. So I'm not doing it personally. So yeah, let's look at some of the alts, see how they're holding up. Ethereum has now come back down below 1240. I told you this puts us in position to start looking for lower lows. Like I said, it seems as if we would come back down here. I told you guys maybe even go sideways for a little while, which seems to be happening. If we fail to re-clear 1240, look at the hourly charts here. If we start to fail to recapture it, maybe we come back up and bounce off of it and start to pull off here. I would be expecting a pull down, as low as 1,050. It just seems as if, we're in now this macro Fibonacci level, and we will usually, once the 618 is lost, come back down to the 1,000 or the 786 level. Currently, the 618's at 1211. So, we lose this level, boom, we're in a position to really, really capitulate. I think this should be expected if we lose now 1211. So we lost 1240. That was our really last line of defense. Now 1211 fails. Boom. Capitulation there. I would expect it. And again, we did lose this key level of resistance from this move that we saw back here. Okay. Looking at Solana, Solana's capitulating hard. Again, told you guys we lose 30. We're going to start coming back down. I would expect Solana to come all the way back down towards 26, if not 25. I told you guys 27 was on the way if we lost 30. And we're not that far away, honestly. We've already touched 27.2. So anyone who did open up that trade we talked about is up 7 to 8% with no leverage whatsoever. Yeah, I mean, that's just what we've been talking about, right? Of course, we're in a position where we need to be relatively concerned for Solana, honestly, in my opinion. I mean, this does look very, very big-ass bear flag to me, and if we start coming back down below 25, I mean, I think 18 could be in the picture, honestly, and that's just not something any of us want to see, of course. But considering the fact that we did lose this macro 786 level, I think that is a possibility. I'm not going to say it's out of the realm of possibility, and I think if we lose 25, a crash to 18 is likely, honestly. So that's something to be concerned about. Now, I do believe in that situation that would be near the bottom. I would first see we would maybe go sideways for a while or start to really just boring trade for a while before a break back up. But I do think, we need to hold 26 to 25. This little area needs to hold, because if it doesn't, things are going to get real ugly. And there will be short trades to take on that I will take on, because I think it's so clear that this move would happen. But man, that just doesn't look that good. Matic's still holding up well. I'm really not all too concerned about Matic. Matic's doing a good job. And I think that Matic, no matter what happens, is going to be fine. The amount of partnerships and mass adoption they're seeing, I just think that there's so much potential there. I'm not really concerned about Matic. I'd still buy it right now, honestly. We're still in this wedge. Eventually, we'll break out of it. Personally, waiting to buy more until we break out the top side of the wedge. Okay. ADA is getting its ass beat the last couple of days. It's in a similar position to Solana. I told you guys, whenever we break these symmetrical triangles off of macro downtrends, we capitulate. It happens every freaking time. It's every single time, okay? We see macro downtrend, something sideways or something climbing, we break out of it, we continue to the downside. That's just what happens. And so I know some of you did open up those short trades once we back tested here and lost this low. So you're already up like 12%. Major congrats to you. We did lose this previous breakdown low. So I am expecting ADA to probably back test pretty soon here. I think it'd be pretty surprising if ADA doesn't come back up to try to retest it. Maybe even up to 36 and then either continue or go sideways or something. But I wouldn't be betting that ADA is going to go much further than this without a back test, especially with all of this liquidity from this little move, this little pocket right here. I would expect this little pocket to hold well. So ADA wouldn't be shorting it. We're oversold completely on the RSI, as well as we look at the Bollinger Bands extended into the bottom side, not only on the daily, but on the weekly as well. So yeah, ADA seems like one that'll probably bounce eventually pretty soon. So I wouldn't be doing nothing too crazy on ADA Cardano here. BNB, BNB's honestly not doing terribly. Looking at this thing, we can see that we, of course, have been within this little descending wedge since, I don't even want to say little, but we've been here for we were in it for almost a year. We broke out to the top side, we came back to back test it, and now we're holding it still. We're back testing and we're holding out of here. What I would still be looking for, though, is for BNB to get back above 300 now. We can see this very clear double top form here. There we go. Boom, boom. And we also had some resistance there, and that was also a little bit of support there. So I would say, if BNB is capable of breaking back above this level, boom, probably in a position to see growth. I don't see a reason as to why this would happen, especially after today's CPI data. But I do like the fact that it is holding outside of this wedge. And once we can start finally seeing, the growth, the descending wedge, the breakout, the higher highs, I think the higher highs, whether they're here or whether they're all the way down here, I think that could be a pretty good sign. I think BNB is in a position to finally start to see some growth relatively soon. And so I'm excited to see how this plays out for sure. But for now, we're stuck. We have this clear wedge or this clear line of resistance here. I would at least be looking for the higher high, which would currently be a breakout above $300. Also, anyone who just joined in, we're currently sitting at 54 likes. Let's get that up to 70. I need 16 of you to like that thing. So yeah, that's on BNB. Again, BNB is what I'm looking, do we break 300? Then we're in a position to see growth, in my opinion. But until then, just kind of holding off on BNB. But macro sense, do like the fact that we're holding outside of this wedge. Let's look at Luna Classic right now is still in our little area. Not all too concerned right now. Again, I've kind of been saying like this little 24 level, this little area between 25 and 24, it should hold pretty well. We have so much liquidity in here. So while we're above this 24, while we're above this pocket between 24 and 25, I'm not that worried. So I'm just kind of waiting this out to see, do we start setting higher highs first, or do we, fall below 24? I can go over VeChain in a second. There's a pretty clear level of resistance there, so one could almost say that we need to get back above this trend line. So Luna Classic, I'm more just waiting to see how this plays out. Do we lose this key level of support first, or do we break this key level of resistance? Whichever one of those we do first will be telling of what happens. But for now, not really all too worried. Let me go look at VeChain real quick. Oh, wait, I have it on here somewhere. I forgot this is my big list. One sec, I'll just do it this way. Do you feel like VeChain will drop below 1 cent? What were we at now? 2 cents? 50% from here? I don't know. Let's see. It's definitely not out of the question. I'm not going to sit here and pretend like it's out of the question. Of course, we can see that we've been there before. We've been sub 1 cent before prior to this. But in my opinion, I think percentage-wise, numbers-wise, we are closer to the bottom than most people think. I think the sideways movement is a key identifier of that. The fact that we have seen most cryptos just going sideways for so long. I don't think VeChain, it could. I'm not going to say it can't, but I don't see a reason as to why we would capitulate this far again in the market. I think most likely case scenario is maybe we do something like this and we start going into an accumulation phase, but I'll go to say I don't think it's going to drop below 1 cent, but it could. Let's leave it at that. What else we got? Let's look at DOT, see what this thing is doing. DOT's in a similar position as VeChain, actually. What DOT's doing is it's really retesting this previous point of liquidity. What I've been looking at for DOT, though, is we have a key area or a key level of resistance, and we did struggle to reach it this time around, so one would almost wonder if we need to exclude the wicks. Yeah, I think if we exclude the wicks, it's a bit of a clearer picture here, but what we can see for DOT is very obviously working within a channel. Don't buy it while it's in here, in my opinion. Why would you buy it whenever things are just guaranteed to go down? There's a level of resistance that's constantly pushing it down. Why buy it while it's guaranteed to go down while it's below this? I would be waiting for the breakup here in the clearing of the recent high. So what that looks like for DOT is that looks like DOT getting back above $6.50. If it does that, I think it's in a better position to see some growth. Maybe even retest $8 or something like that. Yeah, so with DOT, I definitely wouldn't be buying it while it's guaranteed to go down. Okay. Let's look at Link. What's Link up to? Link is still sitting pretty well and high. Not too worried about Link. I've always said I'm not buying Link again until it hits 9.7. That's a while away, so yeah, just kind of waiting for Link here. And yeah, that's about it really for the technical analysis side of things. Let's check in on Bitcoin. Bitcoin. So again, Bitcoin's retracing a little bit. Again, guys, I don't think this data that we got, I don't think the data that we got is that bad. Honestly, it could be better, but it could be worse. Minute charts, this doesn't look the best. Again, we talked about this price coming back down to these levels, and that's what it did. What we're actually doing, okay, so this isn't a good, this isn't a good sign. I'm gonna be honest. So what we're doing now is we've now gone macro a little bit on the minutes chart, at least. Obviously, this is like 15 minutes worth of information, but we've gone into this like more macro ascending wedge. This is very likely going to break down. It might not, but it probably will if I had to guess. Now, it didn't necessarily back here. So I guess there are exceptions. I wouldn't bet on this being one though. Just trying to see what Bitcoin's been doing. So if I was looking at this, I would assume that we would break down here, we'd break down here, then here. And yeah, I mean, so even here, right? Where these lows are is where you can expect to break down to. And as soon as we broke down, we came to the first one. Then we came kind of back to these two. Then, of course, capitulated through all of them. So if I had to guess what's going to happen here for Bitcoin, it's probably going to follow this channel until it breaks to the downside. It'll usually break to the downside, retest, and then capitulate back down towards the previous low. But it doesn't necessarily have to go into a full-blown crash here. Again, I don't necessarily think that's necessary. I don't feel as if we absolutely need to. I don't think today's information was terrible. I think if we would have got something over 8.3, I think if the market would have fallen like substantially, or if inflation would have risen substantially over, you know, what we expected, then that probably would have caused us to go, you know, sub 17.6. But I don't really see a reasoning here. I feel like we were pretty close to expectations. It wasn't terrible. We're still starting to kind of see the rate of increase on inflation still slowing down. Core CPI rose and it's at an all-time high since the 80s, but the rate of increase is still down. We went up less this month than we did last month, and that's just, you know, that's always important. Of course, again, we did see unemployment numbers come out to say that per job opening, the number of unemployed people is also going up. I don't think we're in a much worse situation environmentally than we were back here, and I don't think it's as scary as it was back here. So again, even though we're probably going to come retest this at some point, or we may come retest it, I don't see a reason as to why we need to really capitulate. Right? Could be wrong. We'll see. We'll see what the Fed says. My guess is the Fed. What would I guess? I guess the Fed is probably going to either stick to 0.75. I don't think they're going to go up to 1. I think they would save 1 for if it goes up. Like, if we would have went to like 8.4 or 8.5, yeah, then I think, you know, a 1 or 100 BPS rate hike, I think that was likely. But I don't really see them doing that. Again, I may be misjudging this, but I just don't feel like this is that bad. Because I just feel like it could have been worse. I really feel like it could have been worse. Let's see what people are saying, though. And we are going to wrap up the stream here in a second. I'm not gonna turn on the volume for this because hey, this dude is quick though. I give it to him. All right, let's see. U.S. stocks plunges, hot CPI data locks in another hefty Fed rate hike. Yeah, of course we're going to see a Fed rate hike. That's for sure. What time did the markets open yet? Let's see something real quick. Yeah, this thing's getting smoked. That's for sure. So NASDAQ opened up pretty substantially down. About down 3.57% right now, I believe. Closer to 4% now. Down 4% on the hour. That is obviously going to have a major impact on the rest of the market. Is whenever the NASDAQ goes down, pretty much everything goes down. I don't really feel like this is that bad. I don't know. I don't know. I feel like I might just be misjudging it. I just don't feel like it was that bad. I feel like it could have been worse. I feel like this is what we expected. We expected 8.1, 8.2, 8.3, somewhere in there. We got the middle of it. Could be worse, could be better. But I think the reason things are going down is because they're not getting better yet, right? Everyone's just waiting for things to get a lot better. We're not there yet, but I think we're getting close to it. It's just taking longer than people wanted. People are a little bit impatient. And so, of course, for that reason, people are a little bit not excited. Now, I'm still under the belief that even if we do find a bottom soon, I don't think we're going into a bull market anytime soon. And I've been saying that, and people don't really like when I say it. But it's like the tweet I made the other day. I said, I think percentage-wise, we're closer to the bottom than people think. Time-wise, I think we're farther from a bull market than people think. And what that means is, like, I don't think we're going to do this. I don't think the markets, especially like the NASDAQ, or even let's go to Bitcoin as an example. I don't think Bitcoin is going to do this, where it comes down to like 5K. I do not see this happening, honestly. I think more than likely we find a low. If we are going to lose this 17.6 low, I think we find a low closer towards like 14 to 12. But I think that even though percentage-wise this low is pretty close, a bottom is pretty close, I think it would take a long time of either this or capitulation into sideways trading before maybe one more capitulation and a bounce. I believe it is going to take a lot longer to enter into some type of growth or to some type of bull market than most people think. I think it could be up to another year, honestly. And the thing about it is we need these markets to forget what good feels like. We need these markets to forget what excitement feels like. We need these markets to forget what just general gains feel like. And I don't think we're at that point yet. I think it was way too early. I think we're in a position where people still are hopeful, and whenever there's too much hope, there's nothing good happens. Now, we very well may rally at some point. We could get one more bounce. I still believe it's likely that we retest this, right? So at some point, we should come back up to this line. I mean, at some point, I would say within the next like 8 weeks. Maybe. That might be a reach, but I think it's likely that we push back up here at some point, but I don't think we break it. I think it looks maybe something more like this or something like, this, but I don't think we're in a position to see growth, and I think it's going to take us to at least the summer of next year to really start to see some type of change. And so for that reason, whenever we get data that comes out like today that says inflation's it's getting better, but we're not, it's the rate of increase is declining, but we're not getting better, it tells me, yeah, that kind of just further confirms that it's going to get fixed eventually, right? Inflation is not just doing this. It's doing this, right? In which we saw the exponential growth, but the growth, even though we're going up, it's starting to decline a little, okay? And so for that reason, eventually this thing is going to start to go like this. But it's going to take a while, and people just need to be prepared that it's going to take a while. So the best way to go about that, and at least in my opinion, is to just slowly dollar cost average. No huge leverage trades. That's just what they want you to do, guys. And while people are still leverage trading, they're going to keep getting wrecked, right? That's what they want you to do. They want you to leverage up so they can make it go down. They want you to leverage down so they can make it go up. It's just what they want you to do. And so don't be the dumbass who gets caught giving the whales the money, right? That's what they want to do. In my opinion, just hold. Just buy some whenever we dip and hold it. That's the easiest way to go about it, okay? Now, of course, on Bitcoin here, we did see the breakdown. We saw the loss of this 18.3 level, and then we did back test it. This is the back test right here. Here we go. If we fail here, likelihood is we do capitulate to 18.277, and then if we lose that, we're coming back down to 18.18. I do this trade all the time. I'm not going to do it right now because I'm on live, obviously, but these are my favorite trades. Macro downtrends with ascending wedges typically lead to continued downtrends. Boom, boom, right? Some people like to call it like ABC corrections, like a A into a B into a C, wherever we would put it. Oftentimes we'll put A, B, C, but sometimes this C fails to establish a lower low, and we'll see here. We put in like a double bottom and then continue, but usually we'll break down, and that's what we're seeing here. That looks like a failed back test to me, and so here we go. I would assume this is a rush to around 18.277, maybe even a little bit higher towards like 285. But I would assume this gap should get closed pretty quickly. I might be wrong. I wouldn't take on a trade to make a bet on that, but that's just what I would guess is going to happen here. So yeah, guys. I mean, the biggest thing, like I said, I'm going to make myself a little bigger here as we're about to close off the stream. I want to see if I'm right. I want to see if this is going to pull to 18.28. But yeah, look at that. Look at that price. This is where my guess is. But yeah, guys, I would say overall, I think that this is going pretty much according to plan from what I'm expecting in a sense. Nice little back test. Wonder what happens. Maybe we get the macro back test on the minutes. Maybe we go back up to 18.3, bounce off of that, and then head to 2.8. We clear the 18.3, then we're in a good position, but don't know if that'll happen. But again, like, I feel like this is not going terribly, and I feel like people are blowing this shit out of proportion, to be honest. I feel like it's going to take a while. It's going to take 6 months. It's going to take 8 months. We might get a bounce in there at some point back up to that massive trend line, but one way or another, to see recovery, it's going to take a long time. And of course, markets do move in advance. Ooh, look at this back test. Let's see what happens. This is interesting. So this is the back test. Okay, so came down. I thought this could have been it, but it didn't serve it well enough, I guess. So we came back down. Boom, we broke down. Now we're back testing. If we break down below this, boom, 18.8, it'll be on the way. But we'll see. Who knows? Maybe we clear it. Boom, start to work back up. These markets have been moving so weird recently. I've not been trading like almost at all. But yeah, guys, I feel like people are blowing it out of proportion. I feel like we're in a situation where it's probably going to take 6 to 8 months. The markets do move in advance. So I don't think we're going to need to get to 2% inflation prior to the markets finally making moves. I don't see that happening. And I don't think it's necessary. I think we're in a position where we can see some growth prior to then, maybe somewhere around 3% or 4% or whenever. But it's going to take us having a better macro landscape. And I think we're still on track to do it, even if it's going to take a while. The best case scenario, honestly, guys, is that it takes a while. Like, let's just be honest. Like, the best case scenario is it takes 4, 5, 6, 7, 8 months to get the inflation going in a straight trajectory down to where we need it to. The reason being is because at that point, people will have started to lose hope. More people will be out the space. The whales will hopefully be satisfied with the shit they're doing. And, we can be in a position to see growth once there's been a strong reset. I don't think we've had a strong enough reset yet. I think we need a few more months of pain. And so for that reason, we'll see. Now, a lot of people are rallying for a October rally. I have not seen it yet. It very well could come, but I've not seen any signs of that happening yet. I thought we were going to get it. With midterms coming up in November, there could be some type of pump here, but I think people are so fed up, honestly. Sorry, guys, but I think people are so fed up, honestly. I'm not quite sure that even if, I don't think the market doing better in November is going to be enough to make people think, oh, we're doing great. Let's just keep the same systems in office that we have now. I think people want change, and I don't think 1 month of the stock market or crypto market rallying is going to change that, honestly. So it's more of a game right now, I think, where we're in a position of expecting to need to be patient. I always tell people, especially in the Patreon, like, why are you starting to rush now when we've been doing this for a year? Like, realistically, like, why? We'll come back to this in a second. I'm still expecting this push here, but why are you in a rush now when this is what the last year has looked like? There's no point in rushing now. If it takes 5 more months, we've been doing it for 12. 5, not really that bad. Why are you so like, oh, it's been long enough, we need to go? Like, no, just wait a little bit. Like, the longer we wait, the longer we go down, the longer nothing good is happening, the better shit will be when things get good. That's just what the nature of the markets have always said. The bigger the moves up, the harder the moves down. The longer we go up, the longer we go down. The longer we go down, the farther we go up. The harder we go down, the harder we go up. So why are we expecting, why do we want this to be quick? So that this can be quick. So that this can be quick. So that this can be quick. So we can lose this momentum. No. Let this bitch just go down for a little while. Or let it go sideways for a little while. Just let it. Let it do it. We're already here. We're already in the middle of it. None of us are seeing a lot of gains in this market anyway. Let it go sideways for a little while. Let all the retail get pissed. Let all the new investors get mad. Let all the whales be satisfied. Let all the bullshit pass. And then, a year from now, let's just see consistent growth. Let's do that. Look at 2018. Look how shitty this was. I don't know if y'all were in this, bro. This sucked, honestly, right? I wasn't a super big investor into crypto, but I was just watching it, waiting for something to happen so I could get going. This shit was so irritating because it was every single day you would see something new, but nothing would happen. And then we start to capitulate, then we go sideways again. Now, I know this is exciting, and this is like, you can see this, but what people don't realize is back here, dude, when people thought this was going to be another continuation of this, they were just like, it's going to just do this. I remember it wasn't on Twitter. I didn't follow Twitter accounts. I don't know. Maybe I watched it on YouTube because I was in high school. So it had to be YouTube. But it was, people were saying, it's going to staircase down to zero. That's what they did. They did what they kept saying. They were saying it was going to do this and this and this and this and this and this and this. That we were going to go sideways and then down and sideways and down. But we went fucking sideways forever. Like, it felt like forever, right? Then look. And even though this doesn't look the best, consistent growth for years and years and years, right? And 2 full years of growth there, right? Because we had to go through the shit of this to get the greatness of this. So why not? Let's just go through the shit of this to see the greatness of this, right? Let's just do that. Like, let's just be patient. Let's wait, because if this rebounds too quick, it's going to crash again. It will. Because everybody who lost money over the last year is still petty and pissed, and they're going to want their money back. They're going to take profits prior, probably before hitting an all-time high. Then we're really going to dead cat bounce. And that example, my guess, we push all the way back up to like 40K. We get a break all the way back up towards our 786, and then we hard crash again. I don't want to see it happen. I would rather this just do this. Okay, so let's just be patient, guys. Let's just be patient. That's the best thing we can do. Just be patient. Even if it goes down, accumulate, buy some every now and then. Not a financial advisor, can't tell you what to do, but buy some every now and then. Allow this thing to play out as it needs to. Allow it to go sideways, and just be patient. Okay. Last check on the minutes before I wrap up the stream. See if we were right yet. Again, my guess was like 18.28. We're not there just yet. We're going a little bit sideways, so who knows? We very well may not hit the exact breakdown target, but I was pretty damn close, say. But yeah, so overall, on the charts today, not looking terrible. Could be better, could be worse. I'm really not all too concerned with it. Oh, come on, baby. Oh, there we go. Touched our breakdown target. Look at there. Cool. What little move was that? We called a nice little 0.5% move. Does that make me the best trader on earth, guys? Must be, right? Nah, jokes. But overall, that is going to be about it. I just wanted to cover that today, kind of give you guys my opinion. Look at that bounce. Look at that bounce off that level. But that's going to be about it. I feel like we're in a position where it could be worse. I'm not quite sure we're going to lose 17.6. It'll be interesting to see, but best thing you can do is just be patient. Do some accumulating if you're really long-term on this thing. I'm going to go actually off of this stream and go do some accumulating myself. I think there's some pretty good things to buy right now. I think 8 is not a terrible one. I'm going to buy some more Matic maybe. And these are dollar cost averages. These are not long trades or big accumulations. These are very small purchases just because I want to buy some extra things when they're low. But again, nothing big. I'm still being patient, waiting for this market to give us better signs and then going from there. So with that, guys, that's going to be about it. Of course, I hope you guys did enjoy, and I will see you all next time. Peace.